Well, good afternoon, everybody. My name is Eric Levinson, Head of Business Development here at Vena Capital, and welcome to Day 4. Day 1 was a macro overview. Day 2 was a summary of VOF, Vietnam Opportunity Fund. Day 3, you heard from our leaders on our public equity and fixed income side. And today, our final day of our 4-week investor conference. We have a very exciting agenda. We're going to hear from 4 sector leaders, 3 from our alternatives platform, and then again from Ismail Paley, our head of research. And so today's session is really going to focus on 4 of the key sectors in Vietnam: technology, real estate, energy, and financials. Our first guest today is Trung Hoang. Trung is head of our venture capital platform, and we're going to focus the questions on technology. So appreciate you joining us.
Thank you.
All right, so first question, hopefully a very easy one. What is the current status of technology in Vietnam?
Sure. I think that's, we touch and also open our discussion. In terms of technology, you'll see an influx of larger corporations like Intel, Samsung, Honghaeko, start their footprints in Vietnam. But then also recently, you see Amazon and Alibaba are into Vietnam. So overall, technology-wise, in terms of investment, is very hot in Vietnam. But also, I want to give you some data point in terms of technology adoption and usage in Vietnam. So Vietnam is a 100 million population country with more than 130 million mobile subscribers. 70% of that are smartphone. The internet penetration is more than 67%, and people spend almost 7 hours per day on the internet. So the accessibility and affordability is very easy in Vietnam. Vietnam is also features one of the top 5 fastest growing economy by 2030, which will generate about 300 billion of value creation. And all of this will be leveraged or will deliver by digital transformation. So technologies will change everything, and technology is very important for Vietnam, and that's a very hot country.
Now, you mentioned that the average Vietnamese spends, 7 hours a day on their smartphone or internet?
Yeah.
If you walk around, I think that's probably an underestimation. Yeah. It seems like everybody's on their phone here 24 hours a day. They're at restaurants, they're at bars, there's always a phone. So I think that might be understated. So, you talk about technology is widespread, yet there's still a lot of inefficiencies here in the marketplace. And can you talk a bit about that?
Sure. Thank you for touching that. From the outside, there's lots of inefficiency of the Vietnam economy at the moment. But for us, from inside, we see lots of opportunity. There's many sectors across the whole industry. Now, technology shifting is no longer a trend, but it's fundamental change for the economy dynamics. For example, if you take a look into the logistics cost is about 25% of the Vietnam GDP, which is a really big waste compared to other countries in the region or even around the world. So there's a lot of things we can use technology to leverage there. Or if you talk about the retailing, the distribution proportion of the general trade and modern trade is about 86-14 in Vietnam. That will lead the gap between manufacturer and end consumer. So anything online or online to offline will be a tremendous opportunity for Vietnam. Healthcare sector, for example, rural area cannot reach to all of the hospital because they all focus in the 4 biggest cities of Vietnam. So definitely the platform will need to bring patients to hospital and to doctors and how connect them together, make it more efficient. Last but not least, if you look into media, 90% of the media consumption in Vietnam is still very much traditional, talking about TV, radio, newspaper. And then with the new internet economy, talk about YouTube, Facebook, and the number of users on the internet, I just mentioned before, 70%. Actually, that's really the big drive for the economy going forward.
So, it's interesting you talk about technology, but it frankly can impact the economy in a much larger scale in multiple industries. So what you're looking at as an investor, it might be a technology company, but it's not really focusing on technology. It might be focusing on healthcare or something else that services a different marketplace.
Definitely. For Vietnam, you have a lot of technology enabler company, not the technology disruption company, because in order to disrupt an industry, the education level must be some certain level, and Vietnam is more on the replication of technologies.
Interesting. So in developing economy, and you touched on this a little bit, but maybe you can expand on it, how is technology filling these gaps?
Yes. As I mentioned before, Vietnam is very much a technology replication country, and there's so many inefficiency across all of the industry. So technology plays an important role in order to revamp the business. Give you an example for the fintech industry. Only 2% of the population have the credit card, and less than 14% of the rural area can access to the financial product. Financial inclusion is rare and difficult to develop in Vietnam. So without technology, without the new platform, the new way of working, leveraging technology, it would be very difficult to do the traditional ways, to have financial inclusion in Vietnam.
Interesting. So, I think, in the earlier sessions we talked about our mutual funds, our closed-end fund. You run the venture capital group. So I'm going to ask you maybe a different question, which is, what does success look like for you and your team?
Yes. The success for us as an investor, of course, we find good assets and we deliver to the market, have to grow the economy, but at the same time, return money to our investor. And luckily, we are one of the top performers in the region. From our past experience, we were able to invest $90 million USD and return up to $146 million in 11 years, which arrived 23.7 IRR, or more than 7.6x of the return multiple. Success is also on how you can develop the ecosystem where you grow up the entrepreneur network, and then you can continue enrich your pipeline, and then you also can produce the second wave of entrepreneur or successful business.
And I would say it's not luck. You said luckily, but I'll say you've earned it. And I'll ask you a follow-up question, which is, do you find in other areas of the world where, you talked about the ecosystem where a lot of people have left larger firms like Intel and Oracle, and then they have startups. Does that same thing happen here where people, they're in a startup, something you fund, and then they then have a second venture or a third venture?
Yeah, yes and no. For Vietnam, because it's the growing economy, the emerging country, so you see a lot of successful entrepreneurs coming back overseas. Locally, you have a few middle managers come from the larger corporation. When they see the pain point of the industry, so they just leave and they start their own business. But as I said, from our work for the past 15 years, we were able to connect them all and build an ecosystem which is balanced between the international exposure and the local expertise, so we can bring them in to solve the real pain point of the Vietnam economy.
That's terrific. And so, I'm sure, one of the questions that people in the audience have is, how do you source deals?
Well, deal sourcing is a key part of the investment process. And thanks to our strong connection to the local business community and also the larger network, international network from our past experience, and also across VinaCapital Group, we will have the diversified investment in many areas. So we bring into the market not only the financial expertise, but also the corporate experience. How we source for deal is from our daily work, from our win-win partnership with all of the business ecosystem, and also from our investment environment by delivering success to the market.
Okay, so we've talked about how you source deals. We've talked about what success looks like. We haven't really touched on actually how you invest. So can you walk us through your investment process?
Our investment process, as I said, we are the top performer, ranking number 3 in the regions for the past 15 years in terms of venture investment. We have the proven and sustainable investment process from deal tracking. We track all deals in Vietnam and in the regions methodically from our network and also from our exposure to the community at the same time, to our close connection to the serial entrepreneur, which we helped them to be successful in the past. And then we very much focus on the team and the product which is defensible, or the product which can tap into the total addressable market, which can generate more than 10 times of return in a certain period of time by adding our value into financial management, by adding our value into the operation, or also connecting them to the network. And then we are the very first one in Vietnam which can bring a startup to the IPO. So the very first IPO, the technology IPO case in Vietnam, has been done by VinaCapital's Ventures. Last but not least, we have the clear path, and we align the interest with the business owner to make sure that we work hand in hand for a longer time and to deliver success.
Okay, that's terrific.
But beside that, we also leverage on our ability to connect the corporate to the startup community, which we see is lacking in Vietnam at the moment. So normally VC is only looking for startup to invest, but for us, we also take advantage of our network in VinaCapital Group and try to connect them to the larger corporation, which have a lot of resources, capability, but they lack of innovation and technology. So we just stand right in between. We can help them we can help startup to plug into the corporate, to test this idea, use it as a launching pad for their product and test in the market. At the same time, corporate can leverage the innovation technology from the startup to grow faster and more robust.
That's terrific. And I know of a couple of examples. Maybe you can touch on that later in the Q&A. So final question for you, and I hope the audience is wondering about this, which is, are you fundraising now, and what does your ideal client look like?
Well, we continue to develop our pipeline for sure. At the moment, we have a very strong pipeline with more than 170 opportunities. And during this time, we want to take more opportunity to review the safer and the more stable business. But even though with this, the current rate of deployment, we think that we'll be on road sometime around next year, 2021, for the new fund. So that's why now we are open to discuss to all of the business opportunity, business initiatives, or potential in investment.
And what is your, when you think about the next product that you'll raise, what do you think the lockup looks like? What is the time frame in terms of what the product will actually be structured like?
The new product will be very typical VC investment with the LBGP structure. And we foresee the interest in Vietnam will be increased after this. First, because opportunity will arise because of the macro economy of Vietnam. You will see that more and more business is survive or sustainable, and the business owner will have the better look of the environment or M&A because they want to leverage on the bigger guy with the financial strong and to develop the market. But at the same time, the business are being hit by the COVID.
Thank you so much for that answer. I'm very grateful to hear, as I'm sure the audience is, that you are fundraising, and will that be the end of this year? Yeah, as always, the end of this year, or more of a first quarter 2021?
The first quarter of 2021, definitely.
Okay. So hopefully you'll have more questions for Trung. I'm now going to bring up Trung's partner from the real estate group. That's Hugh Do. So Hugh, come on down.
Thank you very much.
Good to see you. See you in a couple of minutes. And so,
Morning, Eric. How are you doing?
I'm doing great. It's afternoon here.
Good to be here.
And so just as a reminder, at the end of the fourth sessions, we're going to have Q&A for the audience. So Hugh runs our real estate platform, which is a rather large platform for Vena Capital, very well diversified across multiple sectors. So we're just going to dive in, and hopefully an easy question, but very interesting. As a real estate investor, what are the toughest challenges you face and your team faces when investing in real estate in Vietnam?
Well, thanks, Eric, for the questions. I think over the last 15 years, we've been in Vietnam to overcome a lot of challenges to become a successful investor in real estate. However, the two factors I think most of the foreign investors will have to face in Vietnam is, number one, is to understand the very complicated legal framework surrounding the real estate market. One of the most ever-changing and as well as complicated and time-taking. To bring a project from Greenfield to a development stage in Vietnam, you have to cross all the doors across the administrations in Vietnam. It's about 11 departments within any cities. Without having to say that certain project at a certain scale, you have to escalate to the central government. So the legal framework surrounding the real estate market in Vietnam is the number one hurdle when investor approaching the market. Number two is timing. Well, to execute real estate transactions, it takes very long time for due diligence, and to complete the deal, as well as to deliver all the conditions to bring the project to a developer stage, take very long period of time. So timing is very important to make it successful and to generate a healthy IRR for the project. And therefore, and you also know that real estate, just like the other market, is very cyclical. It's downturn, upturn. We have seen about 2 cycles in the last 11 years in Vietnam. So again, those are the two factors that I think the most challenging for an investor.
Well, and it's interesting. I would suggest, and for many of the folks in the audience, that your answer would be actually very similar in most geographies as a real estate investor. It may be a bit more acute here in Vietnam. I think there's, as I've learned, local agencies and national agencies, and they don't always talk to each other, at least not in the way that you would think would be conducive to business. So, as you think about that, one of the things you mentioned was timing and be a little bit of cyclicality. Is now a good time to invest in Vietnam real estate? And maybe even answer that maybe by theme as well.
Yeah. So I think depending on your strategy and approach, it's either never be the right time or always be the right time. So there's always good opportunities in any stage of the market. Doesn't matter if it's a growth stage or it's a downturn. But what the biggest lesson learned we went through in the market is the moment when you hear investors or agencies or market research and reports saying that this particular sectors in Vietnam is so hot and you will invest into it.
It's too late. It's
going to be too late, right? So the lesson learned is timing. You have to enter when the market is in the plateau and quiet, especially that sector. Therefore, you can have a chance to find a good deal with a reasonable entry price. And just mention above, to execute complete transactions or to bring a project to a developable stage, it takes sometimes, I would say, in at least 12 months. And without any exceptions, there are cases that would need about 5 to 10 years to bring the project above the ground. So to answer that question, there's always good opportunities, but you have to target the right segment, and as well as having the right structure when you go into the project.
Interesting. So which approach, based on that comment, is the right approach for someone that's never invested in real estate in Vietnam? And candidly, even if they had invested in Vietnam, it would probably be the same answer.
Yeah. So I think, let me divide it 2 types of investors in any kind of investment products too. There's financial investors and there's strategic investors. So financial investors are those who has capital and looking for a reasonable and attractive return. And luckily enough, most of the real estate developers in Vietnam are always at a stage when they're always hungry for capital. So for financial investors, I think the most suitable approach is to come in a project in a structured finance product. The banking sector in Vietnam is not always very friendly to the real estate sectors. Therefore, real estate developers are always looking for alternative sources of capital, and there's a chance for you to take the structured financial product so that you can have a very good downside protection as well as a good upside appreciation if the project delivers better return than expected. For strategic investors, those who I mentioned who is in the real estate sectors has experience developing the project and wants to expand the portfolio from the home country to Vietnam. For those who want exposure to manipulating the products, the
a more active role?
More active role, and they will bring additional value added through their experience, through their client base, through their access to capital offshore. And the common structure when they think of first time going to Vietnam is normally joint venture with a local partner. Well, that easier said than done because the struggling of negotiations between the controlling power of the project and between the local knowledge versus the international standards that you want to bring into the project has been an endless struggle between international developers and the local developers in Vietnam. So in this case, I would suggest if you really want, it's going to be a first project that you invest in Vietnam, you can blend in some sort of convertible and structured finance product first so that you have better time to build your team, to understand the local developers, to learn from their experience. And then after you build enough resources locally, rather, you can take a majority role in the project and develop your own brand name flagship project.
But it sounds like for most investors, being more of a limited partner or less than 50% of the project would be a better idea?
I think so. I think so. In case you want a controlling role in a project, you have to pay a very significant premium to enter. Basically, you're buying the land from the local developers, and then you also have to share another upside in the development stage with the local developer. So in that case, you will be charged double times. You can see that. So therefore, it's pros and cons, right? So you have to consider your goal, whether you want to establish the footprint and willing to pay a premium and lower return, or you want to expose to the attractiveness of the sectors only and put your ego a little bit behind.
Yeah, no, it's important. Well, and I think, again, a lot of those points, which make a lot of sense, I think are probably good advice for anybody that's investing in a country like Vietnam for the first time, particularly in kind of a more illiquid asset class. So, based on what you've said, and certainly, with what we've gone on in the last, 9, 10 months around the world with the COVID pandemic, what sector is the most attractive to invest in today? And as you're talking to clients, as you're talking to investors, I guess what's most attractive, and I'm just curious, are you also finding that that's where their interest lies? Because sometimes someone's interest isn't always in what's most attractive.
Yeah, yep. So if you go into any real estate conference organized by leading agencies at this point of time, a repeated message to investors will be the most attractive sector in Vietnam currently is industrial property.
Right.
With the hope that will become the alternative destinations for the global manufacturer to move in when it's thinking of leaving China or the other regions that has escalating cost factors in the manufacturing. That is correct. That is correct. And it's been proven by a lot of capital injection into these sectors over the last 12 months. However, the one who benefit the most from this wave is actually a local landowner who has already developed the inventory and stocks. They enjoy huge upside when they're selling the land. So industrial zone land price has already been increased about 30 and sometimes 120% depending on the province, depending on the infrastructure development progress and so on. But it's easier said than done again. If you are a new investor who want to invest in a Greenfield project, the biggest challenge in the sectors you're going to face is that in Vietnam, there's no concepts of empty land. People own land, farmers own land, everybody owns land. So if you want to develop an industrial park, especially a large scale, you're dealing with the problem and the everlasting problem in Vietnam called land clearance and compensation. So when the market goes up, the expectation of the farmers when they want to give up the agricultural lands also goes up. And developer can afford high land clearance land when you're doing residential project because they have kind of very high margin. However, for industrial property, the gross margin is not that thick in order to sustain. And normally it takes a long period of time to do the land clearance. So the timing again is also an issue. Right?
Sure.
And the second sector, according to us, is also attractive and is proven by the recent movements by local developers, are the landed properties in outskirts cities of the major cities like Hanoi and Ho Chi Minh. With the infrastructure, you see that there has been more highways development in Vietnam in the last 5 years, more than the last 50 years.
So you're talking about more kind of residential development on the outskirts of major cities?
Correct. So when you see the public transportations get a little bit better, the highway structure and infrastructure connecting, and there's also a demand from people who are going to live and work in industrial zones outside the cities.
Sure.
And with affordable product, and they don't want to go in the city. And nowadays you can see developer in Vietnam has enough capacity and capability to deliver an ecosystem with in-house hospital, school, and facilities, shopping malls, so that you can live and work.
So they're building communities, not just buildings.
Correct.
Okay.
So you can see residential hubs expanding outside and surrounding major cities of Vietnam. And it's always psychologically, local people love landed property because it's a commodity, protect themselves from inflations, and it has been proven very attractive capital gain return over the last 30 years since we have this new economy system.
Yeah. Now, one of the other big investments in real estate over the last several years has been the hospitality area. Kind of tourism-related properties, both for traditional institutions, hotels, developers, but also from individual investors who've gone in and kind of bought one condo or 10 condos or 20 condos and then kind of put them out for rent on Airbnb. Tough question, please answer it. What's the outlook for that as both a current investor or maybe as a potential developer? Is the timing right?
Well, again, you can see normally people mention about real estate, they think this is a long-term investment product. Unfortunately, many investors, especially individual investors, when they enter the market with a very short-term mindset. So hospitality is a long-term play always. Yeah. You cannot build a hotel or resort expecting to be profitable in day one, right? So when the COVID-19 happens and there's a bigger hit to the overexcitement, because the hospitality sector in Vietnam has been doing so well in the last 3 years, just before the pandemic, enjoyed significant increase in the influx of international tourism. The local economy is getting better, so the local tourism market is also boosting itself as very high attractive 2 digits growth. So if you look at hospitality and you're looking at a long or medium long-term horizon, I think it's extremely attractive and it's a very good time to enter the market right now because you have opportunities to acquire projects at a very attractive price.
Sure.
And it's a very opportunistic timing.
I mean, you're going to pay more for industrial park than you would for hospitality.
Absolutely,
yeah.
But it's easier to convince people coming to a future that they can see rather than a little bit, 2-3 years. But inevitably, we have to agree with each other that the pandemic has to go, and hopefully it's not a very long future. And when it's gone, we resume one of the safest haven for tourism across the globe, right? We won COVID-19 in a splendid way, and we will promote ourselves as one of the safe destinations. So I think it's sooner or later the tourism market will come back and the sectors become attractive again. Okay,
cool. Well, I appreciate that. Any final comments?
I think at the end of the day, we at Vena Capital involvement in this real estate sector in particular. Currently, we are focusing on building platforms with investors who are interested in real estate in Vietnam, and we have a capability of bringing a project from end to end. Therefore, we constantly looking for new opportunities to raising funds and capital from investors who's interested in real estate. So we hope that from this window of opportunities, we can find partners who can continue with us in this amazing journey.
So I know, thank you. And so I know that we already have some projects that we're already developing, but you're saying if folks are looking at investing in real estate and they may have a goal, they may have a theme, we can help them execute on what they're trying to accomplish.
Depends whether it actually falls into our strength alley or not, right? So we have particular strength and experience in certain sectors that we have been building up over the last 15 years. And if the demand meets the supply, then I think amazing things will happen.
Terrific. Yeah. Well, I appreciate your time. Thank you so much. We're going to bring up Quan Nguyen, who runs our energy and infrastructure platform, and I'll see you in about 20 minutes for Q&A.
Looking after that. Good to see you.
Good to see you again.
Thank you, Eric.
Okay. So we've got a great opportunity. We've got our third sector head joining us. So Kwa runs our energy and infrastructure platform. And if you know much about developing markets, then energy is a huge growth opportunity. And certainly in Vietnam, there's been, I guess, interesting between kind of a supply and demand almost imbalance. So I guess the first question for you is, how would you describe the outlook for investing in energy today in Vietnam?
Yes, thanks, Eric. From VinaCapital's perspective, we do think current market present very impressive opportunities for not just the private investor, but also the sovereign wealth investor to put the money into Vietnam energy market at the moment. It's driven by many factors, especially on the supply side. Currently, Vietnam, over the last 5 to 7 years, Vietnam is growing in terms of GDP at around 7%. And the electricity demand has been growing around 10 to 11% consistently over the last 5 to 7 years. What had caused, this is a great thing, right? But what had caused is, a large constraint on the supply capacity. So meaning that they would require a significant investment into electricity generation capacity over the next 10 years. With the current plan, we expect the Vietnam economy will face electricity shortage around 2021, around June 2021, around 6 billion kilowatt hour. And by 2023, the shortage would expand to roughly about 15 billion kilowatt hour, represent about 5% of the total electricity demand. So this is a great opportunity for investors like us to step in the game to balance between the demand and supply. And at the same time, Vietnamese government has also presented a significant incentive scheme, both on the renewable front and on the gas front. And we can see from VinaCapital's perspective, we do see Vietnam government has been very actively promoting the investment into the cleaner supply capacity, i.e. gas, i.e. solar, wind, hydro. And it reflected to many incentive schemes that the Vietnam government has put in place over the last 2 to 3 years.
Interesting. So, based on this, how are we specifically looking at investing to take advantage of this kind of energy shortfall?
From VinaCapital's perspective, we're looking to capture the opportunities by significant investment into the Greenfield projects on the 3 areas I mentioned earlier, the gas, the hydro, the solar, and the wind sectors. From VinaCapital, early this year, we have set up a new platform together with GS Energy, a leading LNG player in South Korea, to develop 3,000 megawatt power plant projects in Long An province in the south.
I'll interrupt there. So for those of us that aren't sophisticated energy investors, how big is that?
That would be equivalent to about 8% of the total electricity demand in the country, and it would cost around $3.5 billion US. GS Energy and VinaCapital, we have come to a conclusion that this is one of the most attractive LNG power plant in the country. That's why both members of the consortium are very excited. That is on the gas and LNG side. On the renewable side, we are putting together a renewable platform, focusing particularly on the Greenfield asset, on the solar and the wind sectors. We are working with leading utility players in Europe and US at the moment to put together this platform, and we are very, very excited.
That's terrific. And so are there certain competitive advantages that Vena Capital has within Vietnam that puts us in a unique position to take advantage of this opportunity?
Vena Capital has been in the country for nearly 18 years, mainly working within the private equity space and real estate space, and also the hospitality sectors. We rely on such knowledge in the market, the connection with the local government, the central government, the local champions, and on the businesses across the country. We have a very strong advantage to enter into this market. Of course, with such relationship, we would be on top of the new regulatory framework, the direction of the sectors, and also tackling some of the very important issue in the renewable sectors. Number one is the land clearance, and number two is on the licensing. I think both of those issues are two of the most critical issues for foreign investor when entering into Vietnam market.
Yeah, and I think, and I've been able to talk with you and with Don Lam, our co-founder and CEO, about this, the maze, and this is not unique to Vietnam, but the regulatory environment is complex. Yeah. There's local agencies, there's national agencies, there's industry agencies, and so it's not like there's one body that says, hi, yeah, you get the approval to develop a $3.5 billion power plant. It's a lot of folks who don't necessarily know each other and talk to each other. And so I think, the conversations that we've had is the relationships and frankly the understanding on how to actually navigate this system on behalf of our external partners is really what we bring to the table with the success of developing projects. One of the questions that I hope people are watching or asking today, which is, how are we sourcing capital? Are we looking at every partner equally? Are we looking at internal stakeholders? Are we looking at stakeholders outside of Vietnam? How are we looking at deals like Long An or other deals in the future?
When we enter into a new opportunities, there are two sets of investors that we are targeting. Number one is the strategic investor. Typically ones with significant track record and expertise in the sectors. For example, GS Energy, one of the leading players in South Korea for LNG power plant and LNG terminal. They would contribute a lot of technical knowledge and, of course, the knowledge in experience in the sectors. The second group of investor that we would target is the financial investor, particularly for Long An, for example. We now have GS Energy alongside with us on to develop the projects. But of course, we also looking for financial investor to sit alongside with Vena Capital and GS Energy to develop this project. Because at the end of the day, this project is a large project, $3.5 billion US. So we believe that it would need both group of investors to enter into this transaction.
So for those, quote, financial partners or financial investors you're looking at, are those, do you think, primarily institutional investors? Are they hedge funds, or are they endowments? Do you think there's a profile?
For sure. Within the energy space, of course, you have large-scale energy projects, small and medium-sized energy projects. Typically, for LNG power plant or gas power plant, you will see most of the projects would be of large scale, i.e. of $1-2 billion US upward. And therefore, the investor profile for such investment would primarily be large financial institutions, private equity fund, or pension fund, insurance funds. Okay. Of course, for smaller projects in the energy space, and these are mostly within solar, wind, hydro, and these we would see a much lower capex cost, meaning lower investment ticket size. In this investment group, we would expect to see a smaller size investor. In this case, high net worth individuals, family offices, and starting with capital around $5 to $10 million US per investment.
Right. That's terrific. And then I'll ask you a final question. So if we think about where we are today, here we are in 2020, look forward kind of 5 years out, 2025, will the availability, are the opportunities to invest in energy today going to be there in 5 years?
There will certainly be still opportunities there in 5 years. The question is is about the quantity, the availability of opportunities, and the quality of opportunities. So as of today, this is Vietnam energy market is at its inflection point. MOIT together with EVN and investors, both domestic investor and foreign investor, are currently looking to build the vision for the energy market over the next 5 to 10 years, meaning that for a project to be put into operation 5 years, 10 years from now, they need to be in the master plan as of today. And the construction needs to start as of today or within the next 2 to 3 years. Yeah. Because it would take time, right? It's very complex projects. Therefore, given Vietnam is fully aware of its power shortage in terms of its supply capacity, today we do think that is a perfect opportunity for both private investor, institutional investor, both domestic and foreign investor to step into the game. And therefore, this is why Vina Capital has been putting a lot of effort into this market over the last 24 months.
Yeah. You know, and it's interesting because, you know, what Qua's just spoken about, we've heard about in earlier sessions, where the increase in FDI, the increase in infrastructure spending is going to continue to lead to demand for more energy. So, you know, we'll see in 2025 if the demand outstrips supply again, but certainly the outlook for energy investing today in Vietnam is very, very attractive. So, Qua, thank you so much, and we'll see you in about 10 or 15 minutes. We're now going to ask our colleague to cover financials. So, Ismail, welcome back.
Thank you, Eric.
All right.
Thanks.
Good to see you again. So, for those of you that joined day 3, you'll recognize my colleague Ismail Pili, who's our head of equity research here at Vina Capital. And so, you know, the first 3 speakers were all on our alternative platform with technology, real estate, and energy. And now we invited Ismail to talk about financials, which is really one of the big sectors here in Vietnam. What's interesting relative to the 3 previous speakers is the financials is really a public equity opportunity, not a kind of private or venture stage. So Ismail, thanks for joining us. And we're going to try to do 10 questions in I don't know how many minutes.
Hopefully 10.
It won't be 10. It won't be 10. Okay, so question number 1. Can you paint a picture of the financials? What does that landscape look like today in Vietnam?
Sure. I mean, when people talk about financials, it's typically banks, brokers, insurance. But if you really expand that definition, it can include conglomerates as well as real estate. Sure. For the purpose of our discussion here, it will just be on banks. And for the most part, that's a big field in itself already. We've got anywhere from 30 to 40 plus banks, depending on who you're counting, led by the 4 state banks. And we also have probably a dozen plus foreign banks that's also in existence. So it's definitely a big field here.
All right. So that's a lot of banks.
Lots of banks.
Why is that too many banks?
Yes, definitely too many banks. The big reason behind this is we're in a very early maturity stage as far as Vietnam is concerned. If you look at the penetration rate, you would say that it is too penetrated. You're roughly at about 136% loans to GDP, but that's actually skewed towards the corporate. And if you look at the retail loan, it's only roughly around 28%. That suggests that there's a lot of opportunities, and a lot of the banks, both foreign and local banks, are focusing on that retail end of the stream, both on lending as well in terms of fee businesses as well.
Interesting. So, you know, if we think about that, is that good or bad? I'm not like as I'm hearing this and understanding part of it, I can't decide if it's exciting or not.
Well, certainly there's both good and bad for every side of the coin, and I guess let's start with the good things. The penetration rate, as I said, is quite low. If you look at retail loans to GDP, it's only 28%. If you look at retail loans to the total portfolio of the system, it's only 20%. If you take it one step further, the number or the population, percentage-wise, is about 30% in terms of Vietnamese that actually have bank accounts, supposedly. If you compare that with Indonesia, it's only running around 48% in itself. Now, the bad thing about this is the fact that consumer loans has been growing so fast that debt servicing will become an issue. Household debt to GDP is roughly 51% at the moment. About 5-6 years ago, that was probably just half of that. And we're nowhere close to what Thailand and Malaysia have, which is over 80+%. But certainly, we're going to expect consumer loans to continue to outpace overall loan growth, and that number can only trend higher.
Well, and it's interesting, we heard earlier from Trung on the venture side, he gave a different statistic, which I think is equally important, which was in a country of a roughly, 98, close to 100 million, there's only 2 million people that actually have credit cards. And so while people are certainly underbanked, loans are growing, credit card issuance and other financial products are just coming online as well. Mm-hmm. So, on the financial aspect of it, and certainly, COVID, very important, is asset quality something that investors should be concerned about?
Every time you hear Vietnam posting fast loan growth, people say, actually not just Vietnam, for any system that's growing fast, that asset quality is right behind them. NPLs will rear its ugly head once they slow down. The great thing about this is overall loan growth in Vietnam has just been running between 14 to 18% over the past 5 years. It's not very heady. And so we're not overly concerned that there's going to be something out of the closet a few years later when things slow down. Things are certainly slowing down at the moment. We're only looking at about 3% year to date as far as loan growth is concerned. And yet the NPL ratio is only 1.6% at the moment. The restructuring rate, which is about 3.2%, would be the other way to capture the extent of bad loans or risk loans. But you put that together, that's only about 5% of the total tally. That's not too concerning at the moment.
And would that be a good number in a normal year and a great number in a COVID year?
In a COVID year, it sounds fantastic.
I mean, no, I'm actually serious. I mean, it's, because there is pressure. Mm-hmm. So is that a number that actually gets you, I don't want to say excited, but like makes you feel very comfortable?
A little bit on the comfort side. I mean, I've been around the region for a long time, and typically when we deal with emerging markets, we're probably used to much higher single digits as far as total NPL tally is concerned on a normal basis. The fact that we're able to control it to 1.6% as of the first half suggests things are actually going quite well. Okay. And the fact that GDP is still going to be quite positive this year is probably pointing to the idea that things are probably, I wouldn't say recover, but things are in a steady state at the moment and less pressure than what we saw at the start of the year. Okay,
so that's the good news. I think it's pretty good news. Are there things you worry about in the banking sector?
There's a few. The list goes on, but foremost in our head is probably in terms of capitalization. We're in Basel II now. The world has gone on to Basel III. In fact, they were talking about Basel III.5 or Basel IV. And at Basel II, you can say that it's less onerous, less restrictive. But I think there's a reason behind that madness. And the reason behind that is the fact that if you apply a much stricter standard, such as Basel III, a lot of the banks may not meet that standards. That's the first one. The second one is, if you're under Basel II, it will allow the banks to lend. And for Vietnam, you need the banks to actually be lending. Actually, not just Vietnam, for any market. And if you impose such restriction, then you may not see that 6.5% to 7% growth that we've been seeing over the past couple of years.
Yeah, I would suspect that is, let's call it an understandable compromise, because you always have to balance, growth versus other restrictions that are maybe driven by different concerns that aren't, really centric to Vietnam. So that makes sense. What else, when you look at the banks, catches your attention?
Another one is actually liquidity. A lot of people say, the banks are very liquid at the moment. And yet when I look at the LDR standing 94%.
What is LDR?
Oh, sorry, loan deposit ratios. When that number is at 94%, that does not look like a very loose system to me. It's actually looking quite tight. I start getting scared about a system once it starts entering the 80 percentile range. And the whole notion that you're in the 90s suggests there's going to be some aspect of a liquidity chase. This actually just means you're going to be chasing deposits. And if you take a look at the Vietnamese banking sector at the moment, the deposit rates are still anywhere from 6%, some even 7%. And they're not
of interest rates.
In terms of interest rates. And that's relatively high. And then you take a look at the subset of the deposit breakdown, and it's only 19% CASA, or current account and savings account, which is very low. In fact, the lowest in the region that I've seen. That probably reflects the fact that when you go after deposits, it's price leadership tactics.
So where's the other 80%?
It's in time deposits. That's where that price leadership tactic kicks in.
Like CDs or something like that?
Well, just TDs, anywhere from 3, 6, even a year. Okay. And you can get quite favorable rates only in VND. You get 0, of course, in your US dollar, Eric, as you know. But for the most part, it just means that you're paying at a higher cost. Your cost of funding is unnecessarily higher than what you should be if you're embarking on this deposit chase. Yeah,
and just to translate, just in case you didn't follow all of that, interest rates, if you're going to buy a 12-month CD, are probably close to 7% still, in which, I'm assuming most of our audience is watching this from a place where they're at 0 to potentially negative interest rates, the fact that you can get 7% at a bank in local currency is pretty amazing. And then the 3-month rate is, I think, about 4.5%. And so it is really interesting as we try to raise capital. We're competing against 7% local, and then the banks. What we've learned from our research is most clients, most I should say Vietnamese citizens, don't have one bank account. They have 3 or they have 4, and they chase the deposit. They go across the street for 10 basis points. So that's something that is interesting. Okay, so taking all of this into consideration, how do you put all of these factors together when you assess the banks, and kind of, if you think of it from a hierarchy, what is, what do you look for that says, here's the most important as I evaluate the banks?
Well,
because I know we've bought some banks recently.
Yes, quite a bit. I mean, one of the favorite tools that most investors want to use is ROE. But here at Vena Capital, we want to focus on ROA. And the reason why we want to do that is we want to take the aspect of leverage out of the equation. We've seen many banking sectors post very high ROEs simply for the fact that they have no capital. Historically speaking, I can cite the Korean banks, the Chinese banks even to some extent. And here in Vietnam, that focus on ROA just means we just focus on the operational aspect of the whole business. The ROE is fine in itself. You have some banks are posting anywhere from, I guess, 15 to 20+%. And that's a very attractive returns. But unfortunately, the valuations are not matching up to that. In other words, they're not priced at 2 or 3 times that you would expect for banks to give you 15 to 20% type of ROE.
And what are they priced at?
Book value, give or take, below or sometimes just a bit above. And I would probably pinpoint the fact that the FOL restrictions are probably one of the impediments. Typically, when people go emerging markets or frontier markets, banks are the first port of call, and yet it's hard to access them simply because of those restrictions. You don't have that weight of money to actually put them at their theoretical fair value price, and so that's probably going to be something that needs to be addressed going forward.
And so you're looking at something that trades at 1, 1.5, and it may trade at 3 if it was a regional peer. So potentially, and we talked about this in an earlier session on day 3, we get the NVDRs or something the equivalent like that. You'd think there'd be a lot of capital that might come into these banks in a couple of years.
It should. In theory, if you're posting a 20% ROE, you should be able to command close to 3 times. 15% should give you around 2 times price to book.
Terrific. So, how should we look at the banking sector? Are there other trends, other themes that we should consider, that you should consider? And, particularly as you're working with our portfolio managers and your analysts, what are they looking at?
Well, certainly the macro is probably a thing that dictates in terms of the way we look at the themes that run in the market, if not just the sector. And for the banks, it's a very macro call. And so in that regard, if you take a look at the first stop, which is consumer, the fact of the matter is if you look at the pure retail, which is mortgages, autos, credit cards, as you say, it's still very lowly penetrated. We're not counting household loans, which is a favored way that banks tend to include consumer, but it just suggests that there's a lot of upside. And typically the private banks are doing a better job on the retail front. So that's one thematic angle you can play. Another one might be in terms of FDI and infrastructure. We all know the big story. And in that regard, it's state-owned commercial banks that might be at play there. We'd also like to downplay some very popular themes that's floating around the market at the moment. We just think it's a little bit too premature at this point in time. And this includes a focus on fee income. The market is not ready to actually be extracted, get fees from all the populace. The basic needs, basic banking tools is all they want at the moment. And until we hit a certain GDP per capita or disposable income, it's hard to suggest that investment products, mutual funds, bank assurance will kick in, aside from the fact that it's coming off such a low base that growth numbers look great. And the final one I would have to say would be with regards to the longer term consideration, which is consolidation. At the start of this discussion, we said there's too many banks. And this is an eventuality. But mind you, when that happens, there's always the winner's curse. In other words, you don't buy the buyer, you buy the target banks, and the idea that they get a bid premium. And if I may just backstep a little bit, the other one that I forgot to kind of like not necessarily downplay, but something that we want to keep an eye on is perhaps this trend of digitization. Every bank has some kind of digital offering. Every bank will say that it's a great number. They've got the best one. They've got the best app. It's a buzzword of the month. And yet, currently, it doesn't feel like there's a differentiating point. They can't quantify the benefits, whether cost side or revenue side, at least in hard number terms. So conceptually, it's lip service to us at the moment.
Well, and I think listen, I think every bank, I would say, commercial enterprise struggles with that, which is you have to be digital, you have to have an app. In a country where 2/3 of the population is under 35, people are more mobile. We heard from Trung earlier that people spend 7 hours a day on the internet or on their phone. Walking around, I joked, I think it's actually more than that. And so, I would agree that you have to be digital. Now, what are the cost savings there and how people will engage? Who knows? But certainly, every bank will have a digital offering. So you've been oddly, I would say, not overly positive, even though it's a sector we like. So I'm going to hopefully make you smile for a quick second, which is, what do you like in the sector? Because there is a lot we like.
Sure, there's quite a bit. One angle that you can try and approach the banks is this notion that if you just stuck with private banks and forgot the state banks, you would probably do well in the longer term basis. Now, this goes against the face of logic in the sense that one of the biggest banks and favored banks here is a company called Vietcon Bank. They have 20+% ROE, trading around 3 times price to book. They're big, they're liquid, and people like them. But
they're safe.
They're safe in that sense.
Yeah.
But like looking back to history, it just seems that state banks could succumb to potential government-directed lending or influence, and it undermines the commerciality with regards to their business. I'm not saying that it will happen for them, and if it does, it's probably going to be a long-term coming. But as far as what we've seen elsewhere, it's a theme that maybe you could try and poke and probe in the sense that private banks are cheaper, give you big returns as well. And it's the state banks right now, they also are quite big, but they're priced to perfection right now with Vietcon Bank being the proxy for that trade-off.
And are there specific private banks you'd recommend?
There are. We try not to mention too much, but I would have to say, it's because everyone seems to know what we own, ACB is something that we do like. The franchise that they have seems to be quite resilient. The risk that we were kind of probing seems to be quite addressable and manageable. I think the market knows that we have, at least VOF has a relatively good position on ACB at this point in time. So I think that's one name that we would be happy to share.
Yeah, well, we highlighted in day 3 as well. Mm-hmm. So it's in the VAF portfolio. So it is, if you like it in one fund, it's highly likely that your research team will talk to all the portfolio managers. Yeah. So last question for you. This is our 10th question of 10 and 10. Mm-hmm. Are there other factors that your team considers? You mentioned FOL. Are there other factors your team considers when looking at the banks?
Sure. I mean, at the very basic sense, we look for price catalysts. Many have argued that banks are cheap at a certain level, but without that catalyst, that value becomes that value trap. So you have to be able to identify what's coming around the corner that will potentially push the price higher, because whatever's priced right now is probably known by the market. Ourselves, we do have a strict discipline in terms of our fundamental assessment. We apply the CAMELS framework, which U.S. banks analysts tend to use for credit.
And what does CAMELS stand for?
Capital, asset quality, management, earnings, and liquidity, with sensitivity done to either interest rates or NPLs. There's a very rigorous process, but we do apply that internally. We also apply the operating return analysis to dissect profitability. And again, this is like the DuPont breakdown for banks. And finally, in terms of getting that fair price valuation, as many banks analysts will use, we do like the Gordon growth methodology to derive a fair price. But as I said, we do look for other technical factors such as FOL, market sentiment, before we do decide on which names we will try and encourage our investors to buy. Yeah.
Well, terrific. Well, Ismail, thank you very much. We are going to grab 3 more stools for our colleagues, and then we'll have our final Q&A session of the investor conference. So just bear with us as we bring some stools up here. Thank you very much. All right. Gentlemen. All right. And so now we are here for the full panel. So I'm back here in the middle. And what I would say is if you have any questions for any of the panelists, please type them into the chat function. And we have our first question, which I would say is an investment question and probably a personal question. Hugh, this one's going to go to you. The question is about real estate, specifically, the condo market. The question is, I have an investment in a condo in D4. The question is about residential real estate in Ho Chi Minh. Has it peaked? What is the near-term outlook? And I guess I'll add to that, just in discussions with other folks, is do we need a situation where foreigners need to be allowed in? Can the high-end kind of residential real estate market move forward without foreigners as well?
Yeah, thanks for the question, and thanks for the question. So I think there has been a very strong price appreciation across the condo market, especially the upper, mid, and high-end segments over the last 3 years. And therefore, people has been worried whether the market has been peaked and there's a threat of a bubble burst or not in the market. We're looking at both of the demand and the supply side. There are very strong support factors. First, on the supply side, there's been very sharp drop in terms of the number of units introduced to the market over the last 2 years, which helped clear up the existing inventories a lot and sustain the market price of the products. The developers nowadays have stronger balance sheet and they introduce very creative payment terms. Nowadays, if you buy apartments, you can stage out the payments for very long, and the developers are willing to support the financing expenses from the buyers. So it should also help a lot with creating and generating more demand. From the demand side, in the time of uncertainty, people in Vietnam normally turn to real estate as one of the favorite commodity, just like gold and other types of commodity. They think real estate is kind of a safe haven to park their money in the uncertainty time period. From the other angle of the triangle, from the supply of the money, you see that the bank has been lowered the interest a lot. So it's again pushed people to finding a place to park their money into, and it's also introducing cheaper financing to the market. So all these factors combined, I don't see a threat for systematic market-wide adjustments in terms of pricing, but particularly you have to if you want to look at the specific locations to evaluate the upsides, it must be very specific. Which project, depending on the legal status, depending on the infrastructure developing surrounding it, and you can evaluate the upside potential. District 4, I think, will be very healthy because I don't see any significant new supply in District 4 in the near future also. I can see that we're very much difficult in terms of generating liquidity, especially for secondary sector market, because for existing unit without any potential strong upside, and if you are urgently want to sell your units at this point of time, probably you have to accept certain discount to encourage buyers who is real either speculative investors or those who really want to leave a house to live now. They could say that they have a lot of choices. So you might have to accept a little bit cut in terms of pricing in order to generate liquidity, but it's not a systematic market-wide adjustment. There's no of it.
And so, you know, the kind of cliche in real estate globally, I think, is location, location, location. Exactly. The question was D4, which, for those of you who don't know Ho Chi Minh very well, is literally 5-10 minutes from the city center. So, you know, maybe in a different district, the answer might have been a little different, but there's certainly not an oversupply of new building as well. So next question's coming in, and this is going to be to Trung on the venture side. Has your investment strategy changed at all, or maybe even forced to change because of the COVID-19 pandemic?
The answer is from the beginning, VinaCapital Ventures is intended to look for investment to solve the pain point in Vietnam across the industry. And we continue to support it. We continue to do that. So there would not be change much in our strategy. And thanks to our deep connection to the local business community and also the international partnership, the network, we are seeing the steady flow of deals coming in, and then we are working on investment process for many companies in Vietnam at the moment.
So maybe a little bit of a follow-up. So in a weird way, because you invest in a lot of companies that solve pain points, technology, logistics, have your companies actually, will they come out stronger? And did this maybe give them, maybe expedite some of the demand in terms of some of their businesses? Well,
all things are considered, and surprisingly that they have fared the situation pretty well. They take the situation to reposition their markets, strengthening the internal process to be more efficient. And the results speak for itself that a third of the portfolio had been raised money during the difficulties in the past 9 months.
Higher valuations, I hope?
Higher valuation.
Raising money is one thing, but the valuation's clearly
Oh yeah, yeah, step up. They raise money internally and regionally.
Okay, well, that's terrific. That's good to hear. Let me see if I can read the next question. I'm not sure how the font got so small this time. Kwa, this one's going to go to you about energy. Now, in terms of, we talked about kind of the Greenfield projects, the bigger, larger infrastructure projects. Are there other appealing opportunities to invest in energy in Vietnam today?
Sure. Outside the Greenfield projects, potentially from VinaCapital's perspective, we do see, especially during the COVID time, we do see a few opportunities to acquire brownfield assets on an opportunistic basis. This is because some of the projects, renewable projects owned by real estate developers, for example, they have some liquidity issues, and it may, there will be, there have been, and there will be opportunities arise on opportunistic basis to acquire brownfield assets. But in addition to acquisition of brownfield asset, there are also other opportunities. We're looking at smart technologies, smart grid. We're looking at battery technologies, because from our perspective, the story of Vietnam energy market is not only about the supply side, where we have to keep investing in the supply capacity, additional supply capacity, but also we need to think about how to make the demand patterns more efficient. And that comes with smart grid, how to regulate the electricity in the grid in a smarter way, in an more efficient way, or smart home concept, where the consumer will use electricity more efficiently. So that will help to bring down the pressure on the new additional supply capacity in the next 5 to 10 years.
Let me ask you a follow-up, and this will be very easy for you, but we talked about this in our prep. I didn't know before what the definition was, Greenfield versus Brownfield. Right. So for the audience who may not know that as well, maybe just define that.
Sure. Greenfield projects are projects that are still within developments. It can be during the licensing phase or during the construction phase. Now, brownfield assets are assets that are currently in operation. I think that.
And can you repurpose brownfield assets, or is it more about just acquiring it from somebody else?
I think usually acquiring the brownfield asset and you add in or you improve on the operational side, or sometimes you restructure on the financing side. Okay. But usually it would not be as complex as a greenfield asset.
Yeah. So your brownfield as it exists, greenfield is you're building it from scratch, basically.
Correct. Yes.
All right. And then I'm not sure how we're going to segue here, but there's a question about financials. So Ismail, you have looked at banks all over the region in various parts, in different roles that you've had. When you think about banks in Vietnam, in kind of where they are today in their development, and kind of the development of the infrastructure inside of Vietnam, do any other countries in terms of the evolution serve as a good reference point when you think of where Vietnam is along the development path? Is there a country or a time that you kind of look to and say, here's what I think is going to happen, and here's kind of the role model for us?
One would think that the default answer here would be the Southeast Asian countries, given the market maturity stage. Philippines, Indonesia, Thailand would be the natural default for people to compare Vietnam to. But I'm actually looking at China in the sense that Vietnam has often been called mini China, and I think that actually applies also for the banks themselves. The reason I say that is because of my focus more on the balance sheet. For the longest time, from let's say 2005, when the first IPO came out with Bank of Communications, people were quite focused on three things that we are also focused on for Vietnam banks. The first one is on capital, the second one is on asset quality, and the third one is on liquidity. The capital issue is probably less of a concern at the moment, but certainly the fact that we moved on to Basel II means we're still behind the Basel III standards, which is being globally applied at the moment. The explanation behind this was discussed in the past, discussion we've had earlier today. But it does allow the banks to extend credit and for this country to continue the growth path of 6.5% to 7% we've been seeing over the past several years. On the asset quality front, I'll take China there as an example. The numbers are similar, sub 2%. People are not confident that the numbers we see in China are actually the true reflection of asset quality. I'm not sure if we can say the same thing about that for Vietnam. Certainly they went through a period where asset quality was applying much more pressure than what we're seeing at the moment. And yet people continue to say that the numbers can't be as good as they reflect them to be. I will continue to be guarded given the current environment that we're at, which is with the pandemic. Vietnam has, of course, certainly done a fantastic job in controlling the spread, but we can't control what's going on outside. As I mentioned, the exogenous factor is probably the thing that will probably pull back any progress that the banks or the country will have. And finally, the third point on liquidity, again, drawing back the parallels with China, that was a big concern because back in the day, the PBOC had limited a 75% loan deposit ratio. PBOC? Oh, sorry. The Bank of China, basically, yeah, the regulator. They imposed this liquidity limit on LDR of 75%, which prevented the banks from actually extending credit, but they have since relaxed that. And the whole story behind that is if you get in a situation where liquidity is tight, then it leads to either a liquidity chase or it imposes a limitation in terms of the amount of credit that they can actually extend. The emergence of the shadow banking situation in China from that situation is what we saw. But here, people, as I mentioned, say that it's liquid, but at 96% loan deposit ratio, that is not liquid. And that is probably one reason why we continue to see time deposit rates anywhere from 6 to 7%, simply because the banks still need that liquidity to fund their future credit growth.
Now, I'm going to stick with you, even though that was a long answer, because you talked about the banks, and I want to ask a follow-up question. And then I just see another question coming in for you. But so you talked about various sectors, but yet, having said everything you just said, you're actually very positive on banks. Is there something that is specific about the appeal in banks in Vietnam? Is it versus other sectors? Is it kind of an absolute view about banks, or is it a relative view?
No, the banking sector here is still quite attractive despite the concerns that I might have just raised at the moment. The reason behind that is the relative maturity stage that we're in at the moment. As I said, we can't compare them with Southeast Asia. And there's been a tagline saying that the Philippines is next Indonesia, Indonesia next Thailand, and so on. We can then ask that same question, what is Vietnam? And the Vietnam could be a combination of the next Philippines, Indonesia, and Thailand. But the profile of the banking sector at the moment suggests that it's still focused on loan growth. The margins are quite fat. The non-interest income is quite low, around 20%. And you have not exhausted the avenues for credit growth. We are controlling that anywhere between 14 to 18% for the past several years, which is great because it limits the potential asset quality problems that tend to come when you grow loans between 20, 30, 40% in some countries. The attraction, of course, is the demographic. You have a very unbanked population. You have the potential for technology to be applied simply because it can then reach out to the rural area. The urbanization rate in this country is still very low at around 38%, which means one way to bridge that gap is technology. And perhaps my colleague here can address that situation later on. But that's part of the promise. Loan growth potential, untapped market, big population, young demographic, the list can go on. And certainly we're just starting out in terms of market maturity stage.
Certainly when people look to invest in frontier and emerging markets, oftentimes, financial services is one of the places that they start. It's safe and there's infrastructure and it's certainly growing the demographics.
And that's another thing that I forgot to mention. The infrastructure potential, the corporates are still going to expand and grow. The situation with FDIs, I mean, I was focused too much on retail, but certainly corporate should not be ignored.
And then, Kwa, a question just came in for you. Is there much development on liquid natural gas projects and really the opportunity to replace the dependence on coal? And I'll ask a follow-up, which is that an opportunity? Is that a challenge? And LNG, I've read recently about maybe Vietnam importing LNG from the U.S. So will that replace demand, or will there be LNG development here as well?
Sure.
A lot of questions. Sorry.
Thanks, Eric. So regarding your first part of the questions about much development on the LNG gas projects, yes, there have been quite significant developments over the last 12 months where quite a lot of investors, especially foreign investors, currently looking to replace the coal-fired power plants. Most of these power plants have been on the energy master plan for the last 10 years. But these projects facing significant constraint, especially on the financing and the licensing sometimes. The question on financing is more about the international trend where everyone moving to a cleaner power source. So we talk about lenders refusing to lend money to coal-fired power plants, and also equity investor also turn away, international equity investor also turn away from a coal-fired power plants. The implication of that is that now all of the coal-fired power plants are struggling to raise new financing. So this is why there's a new trend in the market over the last 12 months where foreign investors start to switch their attention to LNG-fired power plant. We have seen over the last 12 months at least 5 to 7 projects are currently under the process to be converted. Now from VinaCapital perspective, as we mentioned briefly during my presentation, we also currently in the process of developing Lng 3,000 megawatt power plant projects, gas fire, but the source is LNG. We successfully, through Lng province, also successfully converted the coal-fired power plant license into LNG power plants. So that was done successfully. Now, sorry, on your second part of the question.
So the second part is, I guess, so we've read recently, and part of it is kind of the significant trade surplus, and they talk about Vietnam now and maybe importing LNG from the U.S. as a way of kind of A, getting energy, and B, shrinking the trade deficit. Is that going to be parallel with this? Is it supplementary? Does that impact the development?
Sure. So currently, if you look at the gas sources, or gas supply in Vietnam, the domestic gas supply is running low, and also it's been on the downward trend. So now with a new, so even this is a risk also for the current existing gas-fired power plant in Vietnam, how they're going to source the gas, especially on the domestic basis. So going forward with the rise of new LNG fired power plants, there will significant rise in the demand for new for gas. So domestic gas run down and then is on the downward trend. So the only source now is LNG. And the LNG, it can be sourced from many continents. One of them is US, for example, in the Americas, from Australia, Middle East, and Africa. Okay. So there are a lot of options available. So when we develop a project, of course, we need to consider the costs and benefits of where to source the LNG. On many bases, number one is the pricing, but the number two, even more important than number one, is the security of supply. For 3,000 megawatt, it will be a base load supply capacity for the nation. You cannot, talk to EVN and say, sorry, we don't have the LNG. Yeah. Therefore, we have to diversify the LNG supply sources. So it can be, 50% from the US and the rest from Australia because it's nearer to Vietnam. So in case any urgent scenarios, then we can source more gas from Australia.
Well, stop you there, only because I'm going to come right back to you. So a question just came in. I understand, I'm going to just read it verbatim. I understand that the IRR for Greenfield solar and wind projects are relatively high at 13 to 15%. Is that accurate? And if it is that lucrative, why aren't the Vietnamese players bidding more aggressively, as it seems players like B. Grimm from Thailand and Ayala Energy of the Philippines are winning a lot of projects? So A, is that accurate? And B, is that accurate?
Sure. I'm glad that energy sector. Wow, the questions. Well, I'm glad that energy sector has received a lot of attention today. So, for example, the IRR for Greenfield for solar and wind projects, yes, I can confirm that. Of course, it's subject to the location of the projects and also the other factors, the economics, the land clearance, and all of that. But we do see that the IRR around of 13 to 15% IRR.
And what about the second part, which is, I guess, are Vietnamese players bidding for it? Or are maybe companies from Thailand and the Philippines a little bit ahead?
The story of the local market, of course, there are a lot of strong appetite from local investor in Vietnam. The question is about capital. To develop significant supply capacity for new renewables, you would need a significant capital injection. I'll give you an example. For a 1 megawatt capacity for wind projects, you would need roughly about $1.5 million US. Now, there are two questions related to that. First is the equity financing, and the second is the debt financing. So most of the companies, the local companies in Vietnam, to find way, there are not many companies that be able to develop large-scale projects domestically. Yeah. So to do that, first of all, they need to, of course, use part of their balance sheet to fund these projects, but of course only to a certain limit because these are this is still a non-core.
But just to be more, so do you think more Vietnamese players will bid?
Well, basically, we'll bid on the licensing.
Yep.
But then on the actual construction and operation, I think the focus would be on the foreign investor.
Okay, well, and that's fair. So I think there's two parts of it, which is who ultimately wins the contract and administers it, and who finances it might be separate. So I think it's going to be expertise and then financing.
And I do think I just want to add one point. I do think, but the game changer would be, the JV, a joint venture between a foreign partner with strong expertise in renewable sector or gas sectors, and together with a strong local partner. Yeah. For example, VinaCapital.
Yeah. Okay. So thank you for that. So Trung, another question just came in for you. And so earlier in our conversation, you talked about deal flow, and interestingly how one of the ironies of COVID is that it became, I don't want to say easier, but people couldn't come here, so we got more access to deals because we're already here. We already have deep relationships in the investment community with the corporations. What is our investment plan for the next 2 years? Is our deal flow continue to increase? Do we get to be more selective? And what is the outlook in terms of being an investor like that?
Well, thanks. We have a very strong pipeline. We have more than 170 opportunities right now in the pipeline. And I think due to the current situation, it's difficult to define where or when we will have the new or the post-pandemic. So I guess we continue to work on the pipeline, and thanks to the Vietnamese government, they've done a good job. So we are able to resume the business earlier than the other country in the region. And that will really help us or give us more time to look into opportunities and spend time with them to define what will be best for us and better for them going forward. I'll give you an example. Ismail talked about the banks. All banks now, they encourage people to use cashless. So any system or solution which will help to access into bank info, or how to have to streamline all the process, make it more efficient, will definitely be the opportunity, because State Bank of Vietnam also want to promote the financial inclusion. Another area, Vietnam GDP is contributed up to 70% by consumer spending. So actually retailing will be the area will be very interesting, important with technology leveraging. Last but not least, talk about logistics. So when we resume the business, so the inefficiency, as I mentioned before, 23% of cost in logistics is a big waste. So definitely the logistic area is in need of technology, to bridge a gap on, so to make it more efficient.
Perfect. And then Hugh, I'm going to go back to you, and this is a little bit. Someone asked this question, but I don't know if they're an affiliate, because it's like literally a great question for you in terms of it being really on a tee here, which is, what are the competitive advantages that VinaCapital has in terms of helping people invest in real estate in Vietnam?
Thanks. I think whoever made this question is a good friend of VinaCapital.
Yeah, or they're evaluating somebody else, so you don't know.
Yeah. So I think there are three things that set us apart in this field. I think number one is we are probably one of the earliest and probably the largest real estate focused investment real estate asset managers in Vietnam, starting back all the way from 2004. We've been in the market for 16 years. We've done around 70 projects across Vietnam, in most of the major cities where there are opportunities across all the sectors that you can name it: hospitality, residential, commercial, all of them. The wealth of experience as well as the market coverage that we are bringing on the table is unrivaled compared to the other developers across the country. The second is about the variety of the products. We successfully launched very large platforms after we closed down our first fund. Currently, we still manage about $2 billion in investments in real estate in Vietnam right now. We have large platforms in hospitality. 3 years ago, we started a platform in industrial properties, which is already entered the exit stage, and we are reviving it with sourcing new deals and seeking for new investments. We had a platform for low-rise residentials again, just come back to my question, to my answers previously. Those are the areas that we think our strength lies on, and there are great opportunities to make a very healthy IRR. And it's just proven that those projects that we've done in the last 2 years has been generating extremely good IRR, above 30%. And last but not least is the methodology. When we approach our partners or investors, it's from a very different angles of the deal structuring. Number one is we structure the fees in a win-win status in a way that is leaning toward more toward the performance fees. So if we make a lot of return for investors, our returns or the fees will be generated larger. And we also put a significant amount of equity from our own principal investment arm into these platforms, normally ranging from 10 to 25% equity, depending on the size of the platform. So this shows our skin in the game, very strong commitment, as well as the confidence that the deals we are sourcing will generating very fantastic return for investors.
So basically, if they were evaluating us versus somebody else, that answer should give them a lot of confidence that we're a great partner. All right. Well, with that, thank you. I'm going to actually reintroduce our co-founder and CEO, Don Lam, just to make some closing comments. So thank you. And Don, thank you for joining us.
Thank you, guys. Hello. I hope you found our 2020 virtual conference informative and engaging. But more importantly, I hope you have gotten a clear idea about how Vietnam is managing the outbreak in a way that keeps the economic growth on track. Vietnam continues to open for business. No country in the region is better positioned to prosper than Vietnam. And no investment management company is better able to provide you, our investor, with access to abundance of opportunity here, now, and in the future. VinaCapital is the only firm to offer investors access to the full range of asset classes, not just listed equity, but also PE, venture capital, real estate, and energy. And we are working to develop new products that leverage our extensive local market knowledge and network and meet the need of both international and domestic investors. If you have any question about anything you have heard over the last 4 weeks, please do not hesitate to reach out to me or one of my colleagues. In the meantime, on behalf of VinaCapital, thanks for joining us. We look forward to seeing you in person in 2021. Until then, I wish you continued health and success.